What should M&A practitioners consider in terms of financing strategies in this changing environment?
I mean, what I would say is explore options. One of our big picture reports focuses on credit, and in there, I didn't work on that report, but we have a talented team who put it together. They were talking about in there was how the overall credit market is growing and new structures are developing. We saw, obviously there was a proliferation of private credit funds, that have come to market in the last few years. But now we're starting to see more partnerships. Citigroup and Apollo had, announced a $25 billion fund. So that's an example of one of those. And the private market it really helps companies that may have otherwise faced, unfavorable terms, in the public markets, so it can bring together, alternative arrangements. Private credit also kind of stepped in because banks had stepped back, recently in recent years, and banks had been tightening their lending standards kind of after, the March 2023 liquidity crisis. And they were pulling back because, there was concern about credit quality getting worse. And that really helped the private credit funds, sort of fill the gap there. But what's happened though, the deterioration in credit really hasn't come to light. Banks have been in pretty good shape. So I do think banks are going to get more aggressive on the lending front, and because they're looking for loan growth right now, banks. So I think that just kind of will give companies more options out there from thinking about financing.